Mercedes-Benz just dropped an absolute bombshell on the entire auto market, and no one saw this coming. The luxury giant, known for its premium pricing and untouchable status, has just done something completely out of character. They've slashed prices across several of their top-selling models. That's right, Mercedes-Benz, the brand that's built its reputation on exclusivity, is now going head-to-head in a price war. And it's sending shockwaves through the entire car industry, from Wall Street all the way down to the dealership floor. So the question is, why is Mercedes suddenly dropping prices? The answer is as shocking as the move itself. Behind closed doors, Mercedes has been watching what's happening in the global market. The slowdown in luxury car sales, rising competition from Tesla, BMW, and even Chinese EV brands like BYD and NIO. For years, Mercedes held the crown for luxury dominance. But now, customers are walking away. Inflation, high interest rates, and massive inventory buildups are forcing even the most prestigious brands to make desperate moves. Mercedes' price cuts are not just a discount. They're a signal that the luxury market is under serious pressure. This isn't a minor reduction either. We're talking thousands off some of Mercedes' best sellers, from the C-Class and E-Class to even some of their electric EQ models. Dealers are being told to move metal, fast. And that's raising eyebrows everywhere because Mercedes never plays this game. This is the same company that prided itself on the best or nothing. But now it seems even Mercedes is realizing that the best doesn't sell if nobody can afford it. And here's where things get even more interesting. This move is about more than just sales. It's about survival in a shifting automotive landscape. Tesla and other EV makers have been aggressively cutting prices all year, forcing legacy automakers into a corner. Mercedes can't afford to lose market share, especially in key regions like the US and Europe. These price cuts are a direct counterattack, a declaration that Mercedes will not be priced out of the future. But while consumers are celebrating these lower prices, Wall Street is panicking. Investors see this as a sign that luxury demand is weakening. Mercedes shares took an immediate hit following the announcement, and analysts are calling it the luxury price collapse. Why? Because once you start cutting prices in the luxury segment, it's almost impossible to go back. Investors worry this could trigger a domino effect across the entire premium car market. If Mercedes-Benz, what's stopping BMW, Audi, or Lexus from following? The auto stock sector is now bracing for volatility, and even Tesla's investors are watching closely, because this could spark another brutal round of global price wars. So what does this mean for you, the buyer? Should you rush out and grab a Mercedes right now? Well, that depends. If you've ever dreamed of owning a Benz but couldn't justify the cost, this could be your golden moment. Dealers are under pressure, inventory is high, and Mercedes is hungry for customers. But be cautious. Some analysts believe even steeper discounts could be coming in the next few months, especially if sales don't rebound fast enough. On the flip side, buying now could lock in incredible deals before interest rates or market conditions shift again. The real question, though, is what happens next? Mercedes' entire strategy might reshape the future of the luxury car industry. If price cuts become the new norm, we could be witnessing the end of luxury cars as we know them. Not symbols of exclusivity, but high-end products forced to fight for volume like everyone else. And once that door opens, it's almost impossible to close it. Because when a brand like Mercedes breaks its own rules, the ripple effects spread fast. Competitors are now scrambling behind the scenes. BMW is reportedly reviewing its upcoming pricing strategy. Audi dealers are already whispering about adjustments. And Lexus, which has been eating away at the luxury market with reliability and value, might finally have the upper hand. This sudden shift has turned the entire luxury segment into a battlefield, and everyone's trying to figure out how to survive without destroying their brand image. The problem for Mercedes runs deeper than just competition. Their production costs are climbing due to expensive EV batteries, complex supply chains, and raw material inflation. On top of that, demand in China, once their biggest profit engine, is softening. That market, which used to buy premium sedans like the E-Class and S-Class in huge numbers, is now leaning toward local brands that are cheaper, smarter, and loaded with tech features. So Mercedes isn't cutting prices out of generosity. They're fighting to keep their global dominance from slipping away piece by piece. Meanwhile, Wall Street analysts are starting to ask uncomfortable questions. If even Mercedes has to discount to move inventory, what does that say about the global economy? Luxury cars have always been the canary in the coal mine. When the wealthy start pulling back, it's a warning that consumer confidence everywhere might be cracking. Investors are watching these signs closely, especially as automakers report slowing profit margins. Mercedes' earnings call hinted at market adjustments, but no one expected the scale of what came next. And now that the company has crossed that line, Wall Street fears it might not be the last time. At the same time, the EV war is adding fuel to the fire. Mercedes poured billions into developing its EQ lineup, the EQE, EQS, and EQB, but sales haven't met expectations. Customers are hesitant, complaining about high prices, disappointing range, and tech that still lags behind Tesla's software ecosystem. These price cuts could be an attempt to reset expectations and draw attention back to their EV models before they lose even more ground. But here's the twist. Every discount they offer on an electric model makes profitability even harder to sustain in the long run. For consumers, though, this chaos could be an opportunity of a lifetime. If you walk into a Mercedes dealership right now, you'll see offers that were unthinkable just a year ago. Cash rebates, low-interest financing, trade-in bonuses. It's like the company is practically begging for your signature. And that's rare for a brand that used to sell out models before they even hit the lot. The shift in tone is staggering. Mercedes wants to project strength, but the deals themselves tell another story. One of urgency, not confidence. What's more, this price war might be about to spill over into segments no one expected. If Mercedes cuts prices on luxury sedans and EVs, what happens to its SUV lineup? The GLC, GLE, or even the mighty G-Class? Insiders claim that internal discussions are already happening about strategic adjustments in those models too. Imagine walking into a dealership and seeing a discounted G-Class, something that was once unthinkable. That would be a sign that Mercedes isn't just trying to boost sales. They're defending their entire brand identity. But the real tension is building under the surface, because every automaker is now watching Mercedes' next move like a hawk. If these cuts succeed, others will follow. If they fail, it could mark the beginning of a new era of decline for legacy luxury brands. Either way, the old rules are gone. The luxury car market is being rewritten in real time, and Mercedes just lit the fuse that could blow the entire system wide open. And the craziest part is, this isn't just about luxury cars anymore. The ripple effects of Mercedes' decision are spreading across every corner of the auto world. Dealers from coast to coast are feeling the heat. If Mercedes, the symbol of premium stability, is slashing prices, how long can mass-market brands like Toyota, Ford, and Honda hold the line? You can already feel the pressure building. Consumers are waking up, realizing they have the upper hand again. They're negotiating harder, waiting longer, and forcing automakers to compete for every single sale. The balance of power in the car market is shifting, and Mercedes may have just accelerated that change. Even automakers outside the luxury bracket are starting to panic. Companies that used Mercedes pricing as a benchmark for their own premium trims, like GMC's Denali, Ford's Platinum Series, or even Hyundai's Genesis, now face a brutal reality. If a Mercedes-Benz becomes more affordable, what does that mean for these so-called near-luxury brands? Suddenly, their top-tier trims start looking overpriced. This could lead to a cascading wave of markdowns across the board, as everyone tries to realign before consumers turn their backs completely. But let's talk strategy. Mercedes didn't make this move on impulse. Behind the scenes, executives have likely been planning this shift for months, maybe even years. The luxury market is evolving. Status alone doesn't sell cars anymore. Buyers now want performance, technology, sustainability, and value all in one package. Mercedes knows that if they don't adapt, they'll get buried by new players who understand this new generation of consumers better. Brands like Rivian, Lucid, and even BYD are coming for the same customers who used to buy Mercedes without thinking twice. So this price cut is more than a reaction. It's a transformation. Mercedes is trying to reinvent what luxury means before someone else defines it for them. Still, the risks are massive. Cutting prices might boost short-term sales, but it could damage the brand's long-term prestige. For decades, Mercedes was untouchable, a status symbol that stood above market trends. Once you teach consumers to expect discounts, it's nearly impossible to unteach them. The next time Mercedes tries to raise prices, buyers might simply wait for the next markdown. And if that happens, the brand that once dictated luxury standards could find itself trapped in a race to the bottom, fighting the very brands it used to outclass. Meanwhile, financial analysts are warning that this could also signal trouble for the global economy at large. When companies start cutting prices to stimulate demand, it usually means one thing: people aren't spending. That's what's spooking Wall Street. Some see Mercedes' move as an early indicator that the broader consumer market is cooling off faster than expected. Luxury spending has always been a bellwether for economic confidence, and right now, that confidence seems to be cracking. Auto stocks are already reacting, with ripples hitting everything from suppliers to tech partners. Investors are bracing for what could be a turbulent few quarters ahead. But here's where it gets even more intense. Mercedes' move might be setting off a chain reaction that changes how automakers approach electric vehicles entirely. Up until now, EVs were treated as premium products, priced higher because of their technology and exclusivity. But if Mercedes starts cutting prices on its EQ lineup, it could shatter that illusion. Other automakers will be forced to respond, and we could see EV prices drop faster than anyone expected. A development that could reshape the global EV race overnight. And that leads us to the most crucial question yet. Can Mercedes pull this off without losing its soul? The brand that built its name on timeless engineering and luxury now finds itself fighting for relevance in a brutal, fast-moving market. Every decision they make from here on out will determine whether Mercedes-Benz remains the icon it's always been, or becomes just another casualty of a changing world. Because let's be honest, this isn't just a business move anymore, it's a survival play. Mercedes-Benz is standing at the edge of a cliff where prestige meets desperation, and everyone's watching to see whether they fly or fall. Inside the company, there's tension brewing. Engineers, designers, and executives are caught in a quiet power struggle. Some believe these price cuts are a betrayal of everything Mercedes stands for, that the best or nothing can't coexist with discounts and deals. Others argue it's the only way forward, that adapting now could save the brand from irrelevance in a decade dominated by electric startups and shifting global power. And you can feel the uncertainty even at the dealership level. Sales managers who used to rely on Mercedes' name alone to close deals are now begging for foot traffic. Showrooms that once radiated exclusivity are suddenly filled with limited-time offers, banners, and financing promotions. It feels more like a clearance sale than a luxury experience. Loyal customers are starting to notice, and some of them aren't happy. For years, they paid top dollar for the Mercedes badge because it meant status, class, and rarity. Now, with prices falling and inventory piling up, they're wondering if the brand they loved is losing its magic touch. But Mercedes leadership seems to have a bigger picture in mind, one that goes far beyond short-term perception. They're preparing for what many insiders are calling the EV reset. It's a massive, industry-wide recalibration where every automaker will have to confront one brutal truth. Electric cars are not selling fast enough at luxury prices. Governments are cutting incentives, consumers are hesitating, and competition from China is flooding the market with cheaper alternatives. Mercedes knows that if they want to dominate the EV future, they can't afford to wait for the market to adjust. They have to force the adjustment themselves. And that's exactly what this bombshell is, a calculated shockwave. By dropping prices now, Mercedes is betting they can grab market share while everyone else is still hesitating. They want to be seen not as a fading luxury brand, but as a leader that's shaping the next era of mobility. But make no mistake, this strategy is a gamble of epic proportions. Because while it might win them short-term buyers, it could also alienate their core audience, the loyal customers who built the brand's prestige in the first place. Meanwhile, other industries are starting to take note. Financial experts are comparing this move to what Apple might face if it ever had to cut iPhone prices to maintain market share. A signal that even the strongest brands are no longer immune to market reality. And if Mercedes cracks under this pressure, it could trigger a psychological shift across global luxury markets, from watches to fashion to real estate. Because when the symbol of automotive luxury admits it's struggling, the message is clear. Nobody is untouchable anymore. But here's the part that no one's talking about: the long-term implications for innovation. Historically, Mercedes used its high profit margins to fund cutting-edge research, safety systems, performance engines, design breakthroughs. If margins collapse, that innovation pipeline could dry up fast. Fewer resources for R&D means fewer breakthroughs, which could slowly erode the technological edge that set Mercedes apart for over a century. And if that happens, we might not just lose a brand. We could lose one of the biggest drivers of progress in the automotive world. Still, for buyers, the moment feels electric, literally. For the first time in decades, the power dynamic has shifted in favor of the consumer. Bargains are appearing on vehicles that used to be untouchable, and customers who once dreamed of owning a Mercedes are finally stepping through those glass doors. But behind the smiles and handshakes, there's tension in the air. Because everyone knows this isn't sustainable. Something bigger is brewing. And when it breaks, it could reshape the auto industry forever. And as the storm builds, the question echoing across boardrooms, dealerships, and trading floors is simple: how far will Mercedes go? Some insiders believe this is just the beginning. Leaks suggest that Mercedes could soon roll out deeper discounts on upcoming 2025 models, including their next-generation electric SUVs. That's right. The vehicles that were supposed to lead Mercedes into a bold, electrified future might now be launched under a cloud of panic pricing. If that happens, it's a clear admission that the luxury EV dream isn't living up to expectations. But here's where it gets truly wild. This price war could turn into an all-out identity crisis. Mercedes has spent over a century building a brand around perfection, prestige, and timeless appeal. But when you cut prices, you start attracting a different kind of buyer. The exclusivity that once defined Mercedes begins to fade, replaced by a crowd that's chasing deals instead of status. That shift in perception might not happen overnight, but once it does, it's almost impossible to reverse. And that's the tightrope Mercedes is walking right now, a balancing act between survival and self-destruction. Wall Street analysts are already dissecting every move. Some believe Mercedes is pulling off a masterstroke, using short-term sacrifice to dominate market share before anyone else can react. Others are calling it a red flag, a desperate move that exposes how fragile the luxury market really is. Shares in competing automakers have started to wobble, as investors fear that if Mercedes is cutting, others will have to follow. BMW's stock has already shown signs of weakness, and even Tesla investors are nervous that another round of global price cuts could hammer profit margins across the entire EV sector. And make no mistake, this isn't just about Europe or the US. The global ripple is enormous. In China, where Mercedes once reigned supreme, local automakers are already celebrating. Companies like BYD and Geely are watching Mercedes struggle like predators circling a wounded rival. Every time Mercedes lowers its prices, Chinese competitors gain ground. Not because they're cheaper, but because they're showing confidence while Mercedes shows vulnerability. And in a market where perception is everything, confidence sells. Meanwhile, US dealers are facing chaos. Some are thrilled. They finally have offers that pull buyers through the door. Others are furious. They're seeing their profit margins vanish overnight. Dealerships that invested heavily in Mercedes' premium image now have to rethink everything from showroom design to customer experience. One dealer even admitted, "We used to sell dreams. Now we're selling discounts." That single line perfectly captures the dilemma haunting Mercedes at every level. But let's not ignore the bigger picture here. The auto industry as a whole is in uncharted territory. The transition to EVs, global inflation, and supply chain shocks have flipped the entire business model upside down. What used to be a simple hierarchy, luxury brands at the top, economy brands at the bottom, is collapsing. Mercedes' bombshell proves that even the strongest players are vulnerable when technology and consumer expectations shift faster than the industry can adapt. And as Mercedes continues to roll out these unprecedented changes, the brand's rivals are quietly preparing their countermoves. BMW is rumored to be developing aggressive leasing programs. Audi is pushing for faster EV releases. Lexus is fine-tuning its hybrid strategy to dominate the middle ground. What Mercedes started might become the most brutal competitive cycle the auto world has seen in decades, a high-stakes battle that could determine who survives the next generation of car making and who gets left behind in the dust. So what we're witnessing right now isn't just a price drop. It's the beginning of a massive reset for the global auto industry. Mercedes-Benz has made its move, and now the world is reacting. The luxury empire that once stood untouchable is suddenly fighting to stay relevant in a market it used to control. Whether this bold gamble turns Mercedes into the comeback king or marks the fall of a legend will depend on how fast they can adapt and how the rest of the industry responds. One thing is certain: nothing will ever be the same again. The lines between luxury and affordability are blurring. The old rules are collapsing, and the next few months could reshape how we think about cars, value, and prestige forever. If you found this story eye-opening, make sure to hit that like button, subscribe, and turn on notifications because we're tracking every twist in this unfolding war shaking the entire auto world. Trust me, you won't want to miss what comes next.